Coming up on market shares, Congress has 2 weeks to fund DHS as Democrats demand changes. Can a deal be reached?
And Netflix faced off lawmakers again on the company's pending deal. How the hearing became a culture war fight.
And Amazon plunging 9%. How big tech's $1 trillion wipeout is continuing. Hold on to your wallets because market shares starts right now.
Good afternoon and welcome into Market Shares. I'm Teaghan Brostom.
And I'm Drew Albaugh. Markets closed just minutes ago, so let's take a look at how the major indexes ended the first week of February. On to our market update, and you see the three major indexes. Mixed results, the NASDAQ down 1.7%, down to $22,000. The S&P right around even at 0.01. You see the dip and then the rise back here on Friday, the late market, up for S&P and for the Dow. Again, similar story up until Friday, the Dow down, but now all of a sudden Teaghan up 2.5%, mostly because of today, Friday, and just under 50K, but earlier today, it did cross 50K for the first time
Exactly,
ever.
And that is a pretty historic milestone for the Dow and U.S. history, honestly. Since 1986, the Dow has been the U.S.'s longest market moving tracker, and that just really reflects kind of some underlying economic growth and strength for the market and for the Dow as a whole as well, with that big milestone.
Right, and kind of across all three of these indexes, you see the decline and then the rise on a Friday. You wonder why. Anthropic's releases a new AI model that kind of goes away from the traditional infrastructure, and that was meant to be bad for tech stocks. Tanked in the first 4 days, but then new study today, consumer sentiment up a 6-month high to 57. And all of a sudden, you see the Friday rise. How about it? Happy Friday for wallets all around.
Across the board.
There you go. You know, the NASDAQ over here, not pulling its weight, but oh well, what are you going to do?
And moving on to our first market mover of the day, we're looking at Amazon, also not green this Friday afternoon, Drew.
Yes, a big fall, mostly on that Wednesday to Thursday. A little bit of a comeback here on a Friday, down 13%, just north of $200. Amazon not down because of the Anthropic's news. The quarterly earnings came out and it was not good for Amazon, running under the ticker AMZN, one of the biggest stocks worldwide. Did not have a good day. Main reason why, though, yes, the earnings were down, but the CapEx expected to be $140 to $145 billion. Right. Well, all of a sudden, Amazon said, heck to that, we're going to go $200 billion on future spending, and there's no real clear guidelines on to why Amazon's doing that. And of course, investors respond super negative. Cash flow will be capped for years because of that extra $60 billion. Right. It's a big risk that CEO Andy Jassy wants to implement. Will it pay off? I'm not too sure.
I don't know about that either. They are expected to deliver a 21% jump in sales, but like you said, there's a lot of complexity with that and uncertainty with Amazon as well.
Yeah, and investors want to know a clear plan. Wants to know what this extra, $200 million will be spent on. Yes, AWS kind of keeping some investors afloat, up 24% year over year. But yeah, still Amazon down. Will there be new leadership over at AMZN pretty soon? It might have to happen because this is a massive blow for one of the biggest stocks in this country.
Right. And now moving from Amazon to Reddit, that social media company, also down this Friday afternoon. And they're down for a couple of reasons, mainly because of new AI models, specifically Anthropic, like you mentioned, Drew, that are really promoting YouTube and Google search information over Reddit, which is causing a lot of investors to be fearful of Reddit and fearful of Reddit's economic future.
Yeah, and this Reddit stock you see, down over 5% today. And unlike the other stocks where you see kind of the bounce back on the Friday, this doesn't happen this time around. And like you mentioned this is despite a really strong Q4 earnings report, the revenue jumping over 70% compared to what it was in Q3, and still Reddit down over 5%.
Exactly. They did announce a pretty significant change, though, which is that $1 billion buyback program, newly announced, and it's kind of signaling that their management's confidence in sustaining this momentum, which clearly investors aren't exactly agreeing with, though.
All right, from a stock, we're going to go over to cryptocurrency for our third big quote-unquote market mover. Bitcoin.
First green one of the day.
There we go. On the rise again for this Friday, but not for the week as a whole. You see the dip from right under 80K, 70K, down $10,000. I mean, at one point, we were talking about 62K for Bitcoin. This is a cryptocurrency that was north of $100,000 just 6 months ago. Teaghan, this is not good news for Bitcoin.
No, it's not. And they plunged their lowest levels since November of 2024, and they were down around 8% earlier this week. So it is not looking good for Bitcoin, despite these green colors we're seeing right now.
Yeah, and of course, people keep mentioning how Bitcoin is the quote-unquote digital gold. Well, now the question arises, is gold just the real gold? Because gold in the last few months up 24%, and it's almost that people want that tangible thing to put their fingers on over something like a Bitcoin. And kind of everything is trending in the direction that Bitcoin should be rising. President Donald Trump has said over and over again how much he values Bitcoin. Not just that, the American dollar continues to plummet, and Bitcoin has almost been the backbone to the American dollar. However, it has been anything but that for Bitcoin. A little bit of a response today, but overall in the red. There needs to be increased institutional adoption and regulation clarity. Specifically, the U.S. Clarity Act could really turn Bitcoin around.
Exactly, and we will be seeing some of that literal gold later these couple of weeks with the Olympics. But now we are moving on to Trump and these prescription. President Donald Trump just announced the launch of Trump RX, a direct-to-consumer website that is key to its administration's effort to lower prescription drug costs in the U.S. The site is not expected to sell drugs directly to patients, but will act as a central hub that points them to drug makers that are offering discounts on certain products on their own direct-to-consumer sites. Press Secretary Caroline Leavitt said millions of Americans would save money through Trump RX, but if it's unclear if all patients, particularly those with insurance coverage, will see more cost savings from using that site to buy their medicine.
Treasury Secretary Scott Bessent refused to rule out the possibility of a criminal investigation of Kevin Warsh, President Trump nominee for Federal Reserve Chair. If Warsh ends up refusing to cut interest rates, this was his response to Massachusetts Senator Elizabeth Warren.
This should be an easy one, Mr. Secretary. Can you commit right here and now that Trump's Fed nominee, Kevin Warsh, will not be sued, will not be investigated by the Department of Justice if he doesn't cut interest rates exactly the way that Donald Trump wants?
That is up to the president. Can you commit that you will?
I'm sorry.
Can you?
Wow, very telling stuff there. That was in response to a joke Trump made over the weekend about suing Warsh if he does not reduce rates. Pretty funny joke indeed. In recent months, Trump has targeted Federal Reserve Chair Jerome Powell over his refusal to lower interest rates to the president's liking. All right, well, in a very closely tied vote, Congress agreed to reopen the government after a 4-day partial shutdown. However, the solution is only temporary. Our Vanessa Schimony has more on how these tensions are unfolding, and not just in the Capitol.
That's right, Drew. And for the second time during Trump's term, the government has agreed to reopen after yet again another shutdown. From this past Saturday to Tuesday, the government experienced a 4-day pause in regards to funding the Department of Homeland Security. The main issue regarding the shutdown in the first place came down to law enforcement and immigration struggles in Minneapolis. Democrats in the House do not want to fund agents to encourage crime to increase, and feel as though agents do not reveal themselves are a threat to everyday civilians. In an attempt to appeal to Democrats in the House and eliminate any potential blocking in funding, Border Czar Tom Homan withdrew 700 ICE agents from Minneapolis earlier this week. Although there are still 2,000 agents in the state, this was Homan's strongest move to convey to other members of Congress that the administration is willing to compromise. In a press conference this week, Homan explained how this decision not only is taking other members of legislature into account, but also in itself is simply just more efficient. Take a listen.
And I'll say it again. This is efficient, requires only 1 or 2 officers to assume custody of a criminal alien target rather than 8 or 10 officers going into the community and arresting that public safety threat. More officers taking custody of criminal aliens directly from the jails means less officers on the street doing criminal operations. This is smart law enforcement, not less law enforcement.
Now, Vanessa, how are Democrats versus Republicans responding to this? It's very
Absolutely.
interesting.
And, it kind of just comes down to how they all view it. Democrats feel like the American people need to be prioritized and that these officers, they have to be transparent. They have to, it needs to be easier to identify them, and they have to have more just transparency in general and maybe more body cameras and things like that. But Republicans are really making reopening the government their top priority. They really are emphasizing this almost like operational kind of like continuity where they want to get funding together, they want to get the economy more squared away. And it really just comes down to what both of these parties are looking for, because Democrats are saying, hey, we really need to make sure that the people are the big priority. But in the grand scheme of it all, Republicans are saying we need to get the government in order because we can't do anything without that being taken care of.
And over the last couple weeks now, it's been one of the biggest sticking points across American politics. What was the end result from this, and what does this mean for the future?
Absolutely, yeah. So they ended up coming to a compromise on Tuesday. And so 95% of the government is getting funded.
Okay.
So basically all of it is getting funded except for the Department of Homeland Security, which they're giving them about a very important department, especially right now. And so they're giving the DHS this 2-week window, and they're giving all of Congress 2 weeks to kind of come up with a better plan. But the real answer is if they don't come up with a better solution for this in the next 2 weeks, then the government's just going to shut down again. But experts do say that they're optimistic. They think that they're going to, be able to figure this out and get it squared away.
And we've already seen the government shut down, once in the last few months.
Exactly.
And this could be a big downturn for already a struggling economy.
Right, absolutely. And, we're kind of like you were saying, the government already did shut down, and this is the second time around. Who's to say that this isn't going to become, a cycle where if both parties can't consistently come to a compromise, is government shutdowns just going to be a normal cycle that Americans just end up falling into?
That would not be ideal at all. Thanks so much, Vanessa.
Yeah, no problem.
Thanks, Vanessa. And coming up on market shares, the Bay Area is busting out its Super Bowl best this week. How the big game brings an economic boon to its host city in 90 seconds.
San Francisco is expected to make a significant amount of money off the Super Bowl, even with the game 40 miles away in Santa Clara. Our Riley Underwood is in the Bay Area and broke down how these economic impacts could be felt.
The economic impact for the host city of the Super Bowl is immense. This year expected to be nearly $700 million for the Bay Area. With thousands of credentialed media and hundreds of thousands of fans flocking to the area, everyone needs a place to stay and things to eat. Now, one thing that's unique about this Super Bowl is that it affects more than one city. It affects the entire Bay Area in California, with lots of events in San Francisco, even San Jose, and of course the big game in Santa Clara. Everything seems to be kind of spread out. We talked to the San Jose mayor, and he said this is an event that needs to be capitalized on because it affects the entire Bay Area. It doesn't come around often, and in this case, a decade ago was the last time that the Bay Area hosted a Super Bowl. And the economic impact stretches far more than that because you can't talk about the Super Bowl without talking about the commercials. This year, a record high in the amount of money you have to spend to get on the airwaves, on the breaks during the Super Bowl. Nearly $10 million for a 30-second ad. That's the highest ever. Bad news, guys. They're all sold out this year. I know you guys wanted to buy one, but for now, in San Francisco, Riley Underwood, market shares.
I did indeed want to buy one. That's much unfortunate. You're in Sacramento. That's where you're originally from. So you're a little more north, but this is really good for the Bay Area.
Extremely good, and they're very excited. They've been laying out, Mayor Daniel Lurie, San Francisco mayor, has been laying out all the stops. He started with like a welcoming party. Everything's decorated. Everyone's really excited too. It's a great opportunity for the Bay Area.
And like Riley mentioning, it's super rare to get San Jose, Santa Clara, and of course San Francisco all working in tandem over just one city having everything on the rise. And if Riley Underwood couldn't be here with us, of course, hopefully he's getting some some sun-kissed weather over there in California.
Exactly. Seeing some of that West Coast sun.
There we go.
It's a really great opportunity for the Bay Area, and people from all over in California are commuting in for this, which is really exciting. And prediction market Kalshi announced efforts to expand its surveillance and enforcement frameworks ahead of Super Bowl 60. The game has already drawn more than $160 million in prediction market trading volume. Prediction trades on predetermined outcomes, for example, which companies will air ads, have prompted questions inside of trading. Kalshi says it has formed an independent surveillance advisory committee, which will provide quarterly analysis to the company. It would also publish statistics on investigations into suspicious activity. Kalshi CEO said that if the company finds any wronging, the penalties include fines and referrals to the Commodity Futures Trading Commission.
Disney has named Josh D'Amaro chairman of Disney Experiences as its next CEO. He will succeed Bob Iger. This appointment marks the second time in 6 years that Disney has selected a successor to Iger. D'Amaro joined the company in 1998 and spent more than 2 decades moving through roles across finance, marketing, strategy, and operations. He went on to lead both the Disneyland Resort and the Walt Disney World Resort and was named chairman of Disney Experiences in 2020. Disney's stock is struggling to gain traction, however. Shares are trading right around $100, down about 9% over the past year, a sign that the company's turnaround is a work in progress. Tomorrow will begin March 18th. Iger will serve as a senior advisor and Disney board member until he retires from the company on December 31st of this year.
And Alphabet's shares closed flat after the company beat Wall Street's expectations on earnings and revenue. The Google parent closed around 2% lower on Wednesday. After the bell, Alphabet reported fourth quarter revenue of around $113 billion, above the $111 billion estimate. The tech giant said it would significantly increase its 2026 capital expenditure to between $175 and $185 billion. That's more than double the amount that it spent in 2025. A significant portion will go toward investing in DeepMind, an AI compute capacity for Google.
Jeep maker Stellantis has announced a reset of its business. This follows the company's huge investment in electric vehicles, which failed to pay off. The company says it will take charge of more than $26 billion, the majority of which includes write-offs and cash payments for canceled EV products. This announcement sent Stellantis shares crashing 30%. The company has also pre-released some figures for the fourth quarter, saying it anticipates a net loss for 2025. All right, coming up on market shares, Peloton missing Wall Street's expectations on the top and bottom line, how the company is responding right after this break.
Did you hear about the pony with a sore throat? He was a little horse. Can I tell you a cat joke? Just kidding. Why couldn't the Why was the basketball court all wet? Why? Because the players kept dribbling all over it. Where did cats go on vacation? New York. They took over my bedroom. Come on, come on. Okay, Dad. 1, 2, 3. Dad! You saved me. Dad?
Are you okay?
I'm fine, dear.
Your hero needs you now, and AARP is here to help. Find the care guides you need at aarp.org/caregiving.
Welcome back into market shares. From national now to local. Shares of Bob's Discount Furniture barely budged on the New York Stock Exchange after the company priced its public offering at $17 per share. The price was within its expected range of $17 to $19, but share and values of the company at around $2.2 billion. The stock trading under the ticker BOBS closed the day at $17.02. CEO Bill Barton says the company has seen more significant customer gains among higher income households in recent years. The company also plans to more than double its store count to over 500 locations by 2035.
And another debut just happened. Once Upon a Farm went public today, trading on the New York Stock Exchange under the ticker OFRM. Founded in 2015, the company sells a range of organic, cold-processed, refrigerated baby foods and kids' snacks. In 2017, actress Jennifer Garner joined the company as a co-founder. The stock opened at $21 per share, up 16% from its initial public offering price. Shares rose 20% in afternoon trading.
Once Upon a Farm, I love that name, by the way. Peloton posted a worse than expected holiday quarter yesterday. Shoppers failed to show up for its new AI-driven product line and turned away from higher subscription prices. This sent shares down 26%. The company expects sluggish sales to continue in the current quarter. Peloton forecasts revenue between $605 and $625 million, below its $638 million expectation. Despite this, the company's net loss for the quarter was around $38 million, or 9 cents per share. This is a significant improvement from the $92 million, or 24 cents per share it lost last year. Netflix went to an antitrust hearing with the Senate where they heard more about concerns than just monopolies. Market Shares analyst Mia Carr is here to break down the hearing. How's it looking for the merger, Mia?
Yeah, Drew. The U.S. Senate held a hearing with Netflix about recent concerns over their $83 billion acquisition of Warner Bros. And HBO. The hearing turned into a greater discussion of the company's politics, with Republican senators like Ted Cruz and Josh Hawley accusing Netflix of pushing a leftist agenda. Here's what they had to say.
Why is it that so much of Netflix content for children promotes a transgender ideology?
How are people at home, how should they feel even remotely confident that if this merger happens, the combined entity would not simply be a propaganda outlet pushing one particular political view with much greater market power than you have now?
So while the political agenda of the streaming company was a large part of the trial, at its core, the Senate hearing was to discuss consumer concerns about Netflix, which is already an industry giant, getting any bigger. So really, the concern here is that Netflix is buying out some of its competition, Warner Bros. And subsequently HBO Max, which concerns lawmakers that it could potentially become a monopoly. If you take a look at this chart, which showcases the company's market shares in the streaming industry, Netflix is right up there as a top contender, following Amazon, but with this deal, Netflix would obtain the content from HBO Max, making it the industry leader, and essentially if it keeps acquiring more and more services, then it could become a monopoly, which is what the Senate is worried about. So basically, this hearing was to discuss what Netflix's place in the industry is, both economically and, like I mentioned before, politically.
Now, Mia, are the senators' claims that Netflix has a political bias legitimate?
So Netflix is perceived as a left-leaning company. While the company claims to have no political agenda at all, if you take a look at the company's records, there is a history of being more favorable to the left. For example, Susan Rice, who is on Netflix's board of directors, works for both the Obama and Biden administration. Additionally, one of the co-founders, Reed Hastings, is a notable Democratic Party donor. He's contributed millions of dollars to politicians like Californian Governor Gavin Newsom and former President Joe Biden. So while the company itself claims to not have any Democratic ties, there are higher-ups that do have some, which has caused some concerns for more right-leaning politicians.
So because of that, Mia, how will this impact the user's streaming experience directly?
So the outcome isn't exactly set in stone just because no deals have been officially made, but what users can expect is more Warner Bros. Content coming to Netflix. You might end up seeing movies like Inception or The Dark Knight on Netflix. Another guess is that Netflix will probably keep HBO Max separate instead of absorbing it, because that's just kind of an industry trend, and instead offering a bundling deal like Disney Plus and Hulu. So if you own both streaming services separately, the price for both will likely decrease a little bit. So what this really is pointing to is a longer industry theme of consolidation, which is basically a bunch of the services coming together and buying each other out. So basically a lot more of those bundle deals, like I said. So while this may originally mean less expense on the consumer, with less competition usually comes with higher price in the end.
Sad to hear about those higher prices. Now, Mia, what is next for Netflix?
So the deal is set to close within the next 12 to 18 months, and it really depends on shareholder votes and other standard approvals. So a key milestone for this deal that's coming up is with Warner Bros. Company stockholder vote, which is set to happen sometime in April. Warner Bros. Will also be splitting from assets like CNN, Food Network, and TNT, which were not included in the deal. Netflix only wanted the streaming services, not cable, which is interesting because Paramount, which also made a bid for the company, offered to buy the cable services as well, which really we don't see any big changes likely until the end of the year or even early next year once the deal is more finalized. But then we might start to see more of these like Warner Bros. Content on Netflix and probably some price changes. So that's really what the consumer can expect.
Next on market shares, gold and silver prices have sent the cost of Milan Olympic medals soaring. How much the first plate medal costs when we return.
Here we go. We're gonna go out there in the rain. It's gonna get wet. All right, here we go. Go, okay, quick. Oh yeah, yes. So much fun. Mwah. We're getting so wet. Oh, baby, you see, you're so right for me, and I'm right for you. I love the things you do, like sweet tasting wine. Your lips are so divine. Your loving turns me on. My lonely days are gone. That's why I'm never gonna let you go. Never gonna let you go. Babe, I'm never gonna let you go. No, no, never gonna let you go. Baby, never gonna let you go. Never gonna let you go. Babe, I'm never.
Here you go.
Thank you.
Thank you.
Never gonna let you go.
Wrapping up market shares, athletes on the podium at the Winter Olympics this month will be awarded with the most expensive medals in the history of the Games. This is due to soaring medal prices in recent years. Since the 2024 Paris Olympics, the prices of gold and silver have soared 107 and 200%. How about that?
That is wild, and this means that gold medals are now worth around $2,300. That is one heavy neck. More than double their value in Paris. Silver medals are worth $1,400, 3 times their value 2 years ago. With swings on gold and silver prices in recent days, the financial value of these metals could go even higher.
That's all we have time for here on Market Shares. I'm Albaugh.
And I'm Teaghan. Have a great night, Syracuse.